And now, due to the extraordinary events of last night, we've had to hold over all of our regular features, first person and the features and so on. But we do have time to briefly check out the other big story of the week, the reaction to the EU rescue package. So, with the latest news from Wall Street and the markets, over to Jayne Edwards.
Investors around the world seemed to run out of puff on Friday after Thursday's exuberance on global markets. On Wall Street, the realisation sunk in that there's plenty of hard work ahead. The Dow flitted around but finished 23 points higher, while the other indices barely moved. Thursday saw massive rallies after Eurozone leaders finally reached an agreement to manage a 50% cut in Greek bonds, recapitalise banks and quadruple the size of Europe's bailout fund. But even as the head of the Economic Stability Fund was in China lobbying for investment, there was a fresh round of anti-austerity demonstrations in Greece, and Spain's jobless rate hit over 21%. Investors are now turning attention to next week's meetings of the G20, US Federal Reserve and European Central Bank, with hopes high for a cut in euro interest rates. Looking at weekly movements, the US is on track to record its best month since 1974, and the other share markets also piled on between 4 and 5%. Now with local news, here's Marcus Padley.
Well, a great week this week. The market's now up 15% in about 19 days. The market terribly relieved that only 50% of Greek bonds are completely worthless. On the back of that, money shot back into all the risk assets, as they call them, including the Aussie dollar, which is 14% plus off its lows now. We saw a CPI number this week, which was a bit better than expected. That's fed hopes of a rate cut on Cup Day, and that helped the retail sector, most of the majors with a good jump this week. But star of the sector was Billabong. On the back of their AGM, they confirmed earnings guidance and told us that first quarter sales are up 25%. And villain of the sector was Woolworths, who had some rather unimpressive first quarter sales numbers, although the good news for them was that their note issue this week was something like 5 times oversubscribed. We also saw Harvey Norman flagging this week. They went ex-dividend. One of the other sectors going up has been the resources sector. That's 16% off its lows on the back of the copper price 18% and oil price 23% off their lows. Most of the majors up, but star of that sector was Fortescue Metals. They had a big jump. They've been sold off recently on the back of fears for a capital raising, which they duly had, a very well-supported $1.5 billion bond issue. The bank sector is also performing. They're up 16% from their lows, helped this week by the NAB final results. They were very solid and bode well for the ANZ and Westpac results coming up. We also saw Macquarie's interim results, which weren't that flash. They were down 24%, had their lowest return on equity since listing, but nobody seemed to mind. The NAB goes ex-dividend on the 10th of November. In other results news, we had ResMed, which fell over on their results, and Leighton's and AMP, who had updates that were quite well received by the market. And we saw AGMs from Origin, Worley Parsons, Toll, IAG, Newcrest, Qantas. All those went up on their AGMs. One stock going down on the AGM was Pacific Brands. Winner of the week this week was PharmAxis, up 39% on a drug approval. And loser of the week was Mesoblast, down 12%. This has been a star stock, which this week was downgraded by a broker.